What an exciting time to be an investor. Two of the biggest IPOs in the stock market history is coming up, potentially as early as the end of this year. And I want to cover exactly who I am rooting for between these two and how exactly I'm playing it in my opinion on this. If you're interested in investing in these two companies, this video is definitely going to be for you. Now, these two companies, honestly, in my opinion, are not even a one-to-one competitor of each other as much as they come across as rivals. I don't even think the two companies are playing the same game whatsoever. The way I'm looking at it, OpenAI is a B2C business. Anthropic is playing the B2B game. And if you give me a choice between a B2C business or a B2B, I will take the B2B every day of the week. Enterprise customers are more sticky, more predictable. There's more pricing power. There's more lock-in. It's almost like OpenAI are playing the Apple strategy and Anthropic is playing the Microsoft strategy. So let's look at it. First of all, I would argue a bigger competitor to ChatGPT is actually Meta. Meta's the dark horse, and they're both fighting for that advertising revenue. Whereas Anthropic are not doing that avenue whatsoever. You saw the advertisements they released where they were making fun of ChatGPT selling advertisements. And it was really funny. It was really clever. This proves that Anthropic are not even playing the same game. They're not playing the same game whatsoever. It's far more strategic. It's far more towards enterprise customers. ChatGPT is relying on volume and it's relying on their consumers becoming subscribers and selling them advertisement. So Meta is a far more dangerous competitor for ChatGPT. They've already got 3 billion users. They're already getting close to the number of users, if not more, than OpenAI is getting right now. So they're far more in danger of Meta. And Anthropic, biggest competitor, might even be Google rather than ChatGPT. The biggest difference I see with these two models, having used these models, it is very clear that ChatGPT is aimed at the consumer. It is aimed at, a friendship, a psychologist, a therapist. It's very much aimed at the consumer. Claude is not there to be your friend. It's there for enterprise, institutional problem solving. And these are the customers that have the money. These are businesses. They don't care about a friendly chatbot. They want problems solved. They want logic. They want reasoning. They want the intelligence. That's what they're paying for. And companies are paying for it. They are bypassing their Microsoft product, Copilot, and using Claude. And what's kind of happening with Microsoft, Microsoft isn't going anywhere, of course, but Microsoft's became like a digital filing cabinet where the company's forced to use Microsoft because that's what they're built on, but they're just clicking off Copilot and wanting to use Anthropic's product. It just shows that the intelligence that they are pushing through with Claude is just superior, far superior, and anyone that's used both models, everyone will say Anthropic, but the people that are using this product are like software programmers and developers, quote, coders. These are the people that are using the product, and those are clients with pricing power. Consumers have no pricing power, and it's very visible in the finances. The numbers back everything up. I knew this instinctively, and the numbers back it up. OpenAI burns cash, absolutely burns cash. Anthropic, potentially ready to be profitable by as early as 2028. They're already hitting a revenue of near $47 billion and projected to hit $200 billion by 2031, which is just unbelievable. These companies come around once every 40 years, 20 years, 40 years, and there's often times where companies come around and it's just a unanimous decision on if the company's going to be successful or not. And it's just sometimes the winners are just obvious, the winners are picked, and the institutional investment behind both of these companies is just huge. And it's now almost like it's just it's so unanimous that the market's already decided the success of these companies, but it's still leaning heavily more towards Anthropic for the enterprise, and the margins, the profit margins are far superior. But this is because OpenAI are trying to get the consumer. It costs much more money. They're burning money. And I just feel like Anthropic are far more intelligent the way they're operating. Even their advertisement, whether this is true or not, it doesn't matter. Talking about Mythos, their model is just, it's too dangerous to release to the public. You got to love that kind of marketing. That is brilliant marketing. They're just they're doing a far more intelligent job, because the news and Wall Street do the marketing for them by saying the model's too dangerous to be released. Of course, people want it now. You know, that's brilliant. That's genius marketing, and this is why, you know, they're stepping ahead and they're soaking up all the customers that really matter, which is the enterprise. If you're an investor, investors, we want free cash flow. From a shareholder perspective, you want the company to generate free cash flow. That's where you get your buybacks. That's where you get your shareholder value. Anthropic are far ahead on track to generate free cash flow, way before OpenAI is. You know, we're expected OpenAI to be profitable by 2030. You know, it's just a break even at 2030. That's the problem by chasing the volume. And it's just not comparable as far as a profit. It doesn't mean OpenAI is not going to be a great company. It's still projected to hit 200 billion revenue by 2030 as well, according to, you know, the analysts. That's what they're saying. But what I'm seeing is, look at who's investing in them. You know, a lot of these big companies might just hedge their bets. They've got so much capital, they'll just hedge their bets in both of them. But it's very unusual to see both Google and Amazon investing. Okay, these are cloud competitors, both investing in the same company. Google is striking deals, allowing them to use their TPUs, giving them compute power. So it is very interesting to see who's backing it. All the big names, you know, Sequoia is there. You've got 70% gross margins with Anthropic, $47 billion ARR, and they're striking deals with Samsung, Micron, everyone's involved. So it's looking very positive for Anthropic as far as who's backing them and their margins, and the fact that they're going to get cash flow potentially as early as next year, which is unbelievable growth. You know, it took Facebook 10 years, 12 years to hit these numbers, and Anthropic is going to do it in 5 years. You know, so cash projections there. It's just sometimes when you get these companies that come around, it's just clear. It's a clear, solid option, and everyone has a sort of unanimous vote on it. It's not without the risks, of course. The biggest threat could even be companies just using open source models, the open weighted models. That's a lot of people's projections. But the fact is, there's friction involved in that. Companies will need to start buying their own compute power. They might use half their power on their own open models. We can do basic tasks, but they'll end up using the frontier models like Anthropic for the deep intelligence work, the deep problem solving, and they'll pay it. And what ends up happening with businesses that get locked in, it's the same as like Microsoft. Once it's like Microsoft or VMware. VMware is another example where it's so deeply embedded into the company. After 4 or 5 years, companies just got so dependent on the technology. If Anthropic start hiking their prices, the company has no choice but to pay it. That's what I like about B2B. You look at some of the greatest companies, they're B2B. They can just keep raising the prices because the company has no alternative. And that's the way the future's looking right now. And I think when it comes to these types of companies, whoever gets the lead early, they just run away with it. And it's almost like the winner's decided before the company even IPOs. And I think it's just happened so fast, so aggressively. Enterprise companies are already booking in $1 million contracts with Anthropic. And it's far more appealing to me as an investor for the B2B side of it. Consumers, again, ask yourself this question. And if we look down the line, 4 or 5 years' time, realistically, if Anthropic's customers are huge businesses, Fortune 500 companies who are using this, they're getting so productive from the technology, and Anthropic decide to double the price, the company will likely pay it. ChatGPT cannot do the same. Okay, humans, consumers do not have the buying power. So ChatGPT can't just double the price. Yeah, it's always the same for B2C. I've always said this. From my perspective, I like a company with pricing power. They can always increase the price, and therefore the stock will always continue to go up. So that is what I'm looking at. And look at this, you've got massive competitors towards ChatGPT, like I said, Meta. They're making it so accessible for people. If they want to just use a chatbot, they can go into like WhatsApp, they can go into Instagram. It's getting a lot easier. And they're fighting a competitor who has a massive advertising revenue. They're already, Meta's already projected to surpass Google's advertising income this year, by the end of this year. So that's a dangerous competitor for OpenAI, and that is something that puts me off investing in OpenAI, is because of that threat from Mark Zuckerberg. He's willing to spend all the money competing aggressively, and access to 3 billion people, 3 billion users, and it's all about distribution. And if there's something Meta has proved before, it is they are good at copying whatever your product is and distributing it more effectively. So that's a sleeping giant that you need to watch for if you are investing in OpenAI. Anthropic, the threat is like customers using 90% open source models, 10% Anthropic. But that can also be looked as a positive thing. That means that Anthropic has got high margins. They are choosing the strategy of higher price, lower usage. Yeah, and you can see that with the model. Some people are saying things like, you see people online talking about Claude tells the user to go to sleep when they're finished, when they're finished solving the problem. And that's saving on the inference costs. That's saving on the compute power. Yeah, and they're doing that. The model is training a way to be efficient, and it's reflective in the financials. The financials really show that. As far as the actual IPO launch, don't buy on the day that the IPO launches. The way I look at it, at least I'm waiting 6 months. I'm at least waiting 6 months, because you've got to remember, when Wall Street are pitching this IPO, it's almost a little bit like a sales pitch. They're going to make the numbers look really good. But if you wait 6 months, you get a few quarters to really see the financials. You'll be truly rewarded for being patient. Yeah, that's the whole game. I mean, if you're going to hold the stock for the next 10 years, if not indefinitely, because on this channel, we don't sell. That's the goal. The goal, don't sell it. If I'm going to hold this stock for the next 10, 15, 20 years, I'm sure I can wait 6 months to 12 months if I'm really patient, if I want to wait a few quarters to see the financials and to make sure that it is doing what they're projecting it's doing. So that's how I'm playing it. We never want to. History has shown us not to buy at the IPO. You're the exit liquidity for the very original investors of these companies. This is the moment capitalism is doing what it was designed to do. The IPO. This is the moment for the people the engineers at the company. That's their moment. And yes, we will get our moment as well. We just need to be a bit more patient. So that's how I'm playing it. That is my opinion. That's the way I look at a company. I just focus so much on pricing power. I look at the financials. That's the way I make the judgment. But it's so interesting that the actual product reflects so much on the financials. I can see it by just using both products and getting an idea. But it's very interesting. And yes, it's a very interesting time to be an investor. It's an exciting time to be an investor. Lots of opportunities are in the market. As I say, even if you're not wanting to invest in a single company, You have growth ETFs are very attractive in this AI era. We've still got the next couple of decades of hyper growth as compute costs are going to come down. These companies' revenue go up, productivity is going to spike, and I'm very optimistic. I'm very optimistic on AI. A lot of people are very pessimistic. That's not the attitude. The attitude is to adapt to the technology. I've always been one to be an early adopter of any new technology, any new apps, anything. Yeah, just adapt to it, use it. I think it's a positive thing. It's what you make it. Okay, that's the way I look at it. I do not believe it's going to steal jobs and we're going to live in a sci-fi film. That's not my view. I think it'll end up creating more jobs than it takes. Because, as I said, there's jobs today that never existed 100 years ago. Yeah, there's no such thing as someone who was an app developer. That job never existed. And there's more jobs going to be created from it. And it gives people opportunity. So I'm very positive. I'm very optimistic. I hope you are too. And I'm very interested to see if people are feeling the same way between the two companies. Or if you are investing in the company at all. Is that your plan? Or would you rather stay away from it? So let me know.